All right, this one's about interpreting a profit and loss statement. Should be pretty straightforward. I got two companies. They're the same exact company. They both have $1 million in revenue, and they both are construction-based companies. However, one is unsuccessful and one is successful. If you take a look at the unsuccessful one, the cost of goods sold is 700,000, leaving only 300,000 left in revenue after material cost and labor costs. Here, you've got your cost of goods sold as 550,000, leaving 450,000 left. So 300 versus 450, that's already a big hit. And then you've got your operating expenses that are needed to run the business, which here are these, and you should have relatively equivalents for for the unsuccessful as well. So we've got those over here, and they're pretty much exactly the same. Um, and so now we've got our operating expenses at minus 245 on the successful side, leaving us a 205 EBITDA. And when it comes to EBITDA on this side, we have zero and zero net operating income. Um, don't have to pay taxes on zero, so that comes to a net income of zero. Taxes here 55,000 because we are, which you don't see on here. I believe it's on the balance sheet. Our owner has taken a draw, so we have to pay taxes there, and then we also have to pay taxes on EBITDA. Um, and then for self-employment taxes, you have to pay extra FICA taxes because you're self-employed. And the government just wants to get you just one more time with paying extra taxes if you work for yourself, as opposed to working for a corporation. And that's how it works. So you want to make sure you're always having as much net income at the end of the year as possible, but going anywhere below 10% is usually suboptimal because if you invest your money in an ETF in the stock market, you'll end up getting approximately 10% returns uh, on average, as seen over the last 100 years. So in this case, this is great because you're getting high above 10%, and if you and plus the owner's draw is giving you way above 10%, and then so we're good there. If something were to if it were to be like 0% here, um, that clearly we're doing something wrong and we need to fix that. And that's it for the P&L.